My name is Jason Calacanis. I'm an angel and early stage investor from America. Let me invite my guests up. We have 5 amazing investors. Join us. Take a seat. How many people in the audience are venture capitalists or early stage investors in companies? Great. How many people are founders? Oh, wow, a lot of founders. Fantastic. They'll have the money afterwards. They brought checks with them. Move down one. I'll take this one. Yeah, unless you want to moderate. Okay. And how many people are capital allocators, like limited partners or family offices? Raise your hand. Okay, I'll talk to you after. So welcome to our panel. We've got a great group here. We have 45 minutes. I've instructed the panel that they have to answer everything honestly and concisely. And we're going to try to keep this moving quickly. If I could ask the speakers from the previous panel if they could step out and take the conversations outside. Thank you. Okay.
Hello.
So we've got a great panel here, as I mentioned. Henry, I wanted to start with you. Henry invests in the US and China. First, tell us the name of your firm and the sectors you focus on, yeah?
Sure. I'm from Herish Capital, president and managing partner based out of Hong Kong. We are a global tech private equity with 3 offices headquartered in Hong Kong. There's also office in Shanghai and the US.
Great. And so now you invest both in China and the US, correct?
Correct.
The US has had the hardest pullback since 2008.
Yeah.
And China has, the environment for startups has changed significantly, correct? In fact, some of my friends were in education startups, and education startups are no longer allowed, yeah?
Yep.
So maybe you can tell me exactly how horrible your life has been for the last 2 years, and how you're getting through it in terms of making sure your companies survive, because this has been very challenging. What has life been like during this down market, and is it getting better?
I'm expecting something tough like this, but in fact, I think given the sector focus we're focusing on, we're focusing a lot on the deep tech, hard tech, the AIs of the world, the semiconductor of the world, is actually pretty encouraged by the regulators in China. And also in the US, obviously, AIGC, since OpenAI has been a huge movement and excitement in the sector. So we actually managed to ride on that trend both in China and the US. So life's been pretty okay for us.
And is the funding environment in China like it is in the US, which is to say, very demanding? The founders need to show significant growth while controlling costs in order to raise their next round?
Yeah, I think you need to focus on the sectors that there's fundamental shift in paradigm. Basically, we only look at companies that generate 20 to 30x kind of revenue growth in the next 3 to 5 years. Unless we can deliver that, it's very hard to fundraise under the current environment because the multiple in the public market is definitely shrinking.
And so let me ask you about regulations broadly.
Sure.
In the US, the FTC, and then in Europe and in the EU, the regulators have been particularly anti-technology, not allowing mergers, and we're starting to see a lot of regulation and red tape. In China, they were known for maybe moving things faster. Which market is harder to operate in based on regulation?
I think it's very different. I think US, they tend to be more clear in terms of guidance. They set in things like upfront. In China, there are certain gray areas where you just need to navigate through. But I think you need to read between the lines. I think it's very hard as a foreign investor to understand the nuance in China.
Yeah.
Haven't lived in there, haven't sort of been doing business there. I think it's very hard today, if I'm a foreign investor, to invest in China. Where I think that's kind of where we come in with a global perspective, but also local knowledge.
Okay, Jacques-Philippe, we're going to go to you. Tell us a little bit about what Goodlike Capital invests in, what stage, what verticals.
Sure, happy to. Thank you, Jason. It's great to be here. So Goodlike Capital, based in New York, specifically targets that intersection between high-growth tech and consequential challenges. So whether it's climate and sustainability, health and wellness, education, future of employment, financial inclusion. So on the one hand, we focus on that, as well as underrepresented founders. So those are, in the US, about 70% of the population, all women, Black, Hispanic, who currently get less than 10% of the capital. So we see that as another amazing opportunity for investment. And then separately, my background has been at some very large investment firms, 500 billion, 100 billion. And when you come from that side of the capital markets, you typically look at venture as something that's cute. You could put some small amounts of money to work and get high returns, but not really move real capital. So what we look to solve for is how do we implement a process whereby we can really scale? So we incorporated proprietary tech into our process as well as collective expertise in the form of community so that we can really source, evaluate, and support more effectively.
When people talk about diversity in fund managers, we've seen that change radically in the US. We've also seen it change radically in terms of the entrepreneurs who are coming up. What's the blockage in terms of the pipeline, do you think? Or has that been cleared? Because it does feel like we've seen so much focus in the United States on maybe a diversity of fund managers, new funds being started. How far along are we in terms of making it feel, let's say, just strongly diverse in America? Yeah.
Sure. No, that's a fair question, and I know it's something that people think about quite a bit. From what I've seen, so we've been developing Goodlike for the last couple of years. What I can tell you is there's zero shortage of pipeline.
Okay.
We could probably deploy billions of dollars tomorrow if the capital's there, and beyond that, the returns are outstanding. So, I mean, think about it. Many people in here probably have children. You have daughters and sons, and most likely the daughters are equally intelligent. They just don't get the capital for their ideas. And so what I've been seeing as we go out there and we let them know that we're looking for them as founders, we're looking for their solutions, and especially as you're looking to solve for real challenges, climate, health, education, we need to use our full collective brain, which we haven't. We've been using a quarter of our full brain, if you will, in terms of people who actually get capital. And so there's been zero shortage. It's a really, really exciting time to be in the space. And then on our end with Goodlike, we've authentically been connected to those networks for decades, so we know where to find. So I think in terms of the blockage, often it's that investors are looking for deals in that demographic, but they're parachuting in and don't have the authentic relationships.
Yeah.
And that's where we're able to
come in. And they might not understand the culture.
Exactly.
And how unique it is.
Exactly.
But it only takes 10 minutes to look at the top users on Twitter and Instagram to realize there are many people who are black and brown in the United States who have 50 million, 100 million followers, and they're highly entrepreneurial, whether they come from sports, tech, media, fashion.
And it's funny you mentioned, a quick thing I'll mention, we have a number of advisors, including the former US Secretary of Commerce, the president of the Washington NFL team, but then most recently we added an individual, Prince EA, who has over 20 million followers, and all his content is around climate, education, future of employment. So that ties in squarely into what we're doing and how we're doing it.
Ryan, you work at the PIF, which it's very important that you don't say PIF. That's the incorrect way to say it. That's what Americans say when they first come here. It's the PIF, correct?
It is, yes.
It doesn't make any sense. PIF. You're focused on 30 different verticals.
13.
13?
Yes.
Okay, I heard 30 before, and I thought, that's too much. We should probably cut it in half.
Maybe 30 subsectors, but 13 sectors.
Okay, 13 sectors. Now, you have vast resources, and we've seen SoftBank deploy large amounts of capital. It turns out startups generally need smaller amounts of capital. Too much can be a problem. So when you look at funding in the region, you have very young founders. It's the first decade of technology startups, I believe, in most of the region. You would agree?
Yes.
How do you think about, with so much funding available here, how to create a milestone-based investment strategy so you don't drown them in capital? Because you have so many family offices and the PIF itself, there's a lot of sources for capital. How do you hit those milestones, and what do you look for in terms of milestones?
Thank you very much for the question. I think whether it's a startup or a mature company, I don't think you're going to treat them differently, right? The foundations are the foundations. The basics are the basics. So any investment you go in, whether it's a more newco or it's a mature company, each investment has its investment thesis, has its clear milestones, as you mentioned. Some of them are top line, operational, localization, different points, proof of concept levels, and that's how we manage it. So like any investment, too much capital is is a burden, whether it's a huge company, corporate, or a startup.
How many months of runway, in your mind, is perfect? Not too much so the founder gets distracted or lazy, not too short so they're panicked.
So I would say, be on the safe side, you have a 12-month
12-month at least,
but you have the approvals at least for a bigger and a longer amount where the calls become an action of these milestones. There are clear milestones that have been delivered on, and you can ultimately deploy the capital from there.
In the United States, sometimes we look at the region and we paint it with one brush. It's obviously very mistaken. So when you look at the region, Egypt 100 million, Saudi 35 million, UAE 10 million, but which market is the best market for early stage to go after, and why? For consumers and enterprise.
I believe the whole region is ripe for consumers and for entrepreneurs too.
Okay.
So if you look at there are major cities or hubs that are conducive to startups innovation.
Okay,
right?
great.
That starts with R&D, whether that's through the universities or through government funding. It goes to financing, whether it's through VCs, friends and families, and the other F maybe.
Friends and family works pretty good here in UAE.
Exactly. Here and I think in a lot of places also, but the scale maybe is different here. Then you have a strong corporate ecosystem, right?
Yeah.
And these corporates help in commercializing it or ultimately acquiring these kind of things. When I look at, and more importantly, the talent that you have and the demographics. If I look at all the countries you mentioned, all of them have those ingredients.
Who has the best developers?
From a technology perspective?
Yeah, who has the best deep bench of technologists and developers? And then the second question, who has the best designers? Who makes the most beautiful products? You have to pick.
Out of
the region.
I would say we have great talent here in Saudi Arabia, great developers here in
You might be a
Saudi
little
Arabia.
biased.
I have to because I have more visibility here.
Who has the best designers, do you think? I heard Jordan has incredible design talent.
I think it's not about which country, right? It's where you have the most diversity.
Okay,
because when you have the best diversity, you can get the best ideas, right?
Okay.
I believe the region has great diversity, but as you can see from here at the FII, we have amazing diversity.
Got it.
And I believe with the amazing diversity we have amazing products.
Which market has the best customers who are willing to try new technologies? In other words, the most courageous customers to try something new?
Problem is, every answer I'm going to answer, you're going to say I'm biased. So
yes.
I believe given the demographics we have, given our penetration of internet and usage of internet and the different applications, Saudi Arabia is one of those markets where it's courageous. You see it. We are actually, was given also with Vision 2030 and the aspirations that we have that everything is new. We like new stuff. We like to experiment. We like to develop.
People seem very inspired to create companies here.
100%, yes.
Yeah. Okay. Thomas, I want to include you. Now, you invest in sports and healthcare. People don't know, maybe, but your firm has Tiger Woods as an LP and has a GP interest. That's amazing. You've invested in things like X Games. It's been very hard the last 2 years. When you look at your portfolio, how much of your time is spent making new investments or helping the existing investments get through the storm? And is the storm over?
Yeah, no, that's a great question. So what we've seen with the existing portfolio is some incredible resilience in founders. And you see that because a lot of our sports companies have athletes as investors. And they, and as investors and as founders as well. And those founders are used to working hard and being self-motivated. And so they're fighters. And they try to find solutions even in difficult times, right? And so we've had founders that haven't been able to close a capital round, but would find $250,000 checks here, $100,000 checks there, to kind of make it through another 2 months, 3 months, so on and so forth. And in most cases, it has actually been working out. So incredible resilience we're seeing there. In terms of whether the storm is over or not, I believe it's not. I believe we have at least another 6 to 12 months of storm to go. But as a result, where our deal flow at the beginning of this year was actually quite weak, we made 5 investments in August. We made 3 investments in September. It's a lot for us. We're going to continue to invest in the next few months. Fortune favors the brave, right? We want to exit in good times. We want to invest in difficult times when the valuations are low and the investors sophisticated.
When you look at the companies that you were willing to fund this year, in the last 2 months, those, I think, 8 companies, how are you evaluating them today versus in the ZIRP environment, the zero interest rate environment, and how competitive it was? If you didn't write a check, somebody else would 2 years ago. So how much time do you take, how many weeks or months to diligence and make the investment? And what are you looking for today?
Yeah, so when we invest today, we're going through the same process we do when we invest through good times as well. However, we are a lot more aggressive when it comes to setting terms, asking for board seats, asking for extra equity for help. Yeah, for governance as well. Obviously, governance and economic incentives. I have to tell you, when we look at those companies also, what matters more this time is the buy-in from other investors. So do other people, other investors see the same value we see? So what we tend to do right now is we tend to invest in rounds that are already oversubscribed, and the value that we bring allows you a seat at the table, so we're significantly de-risked rather than being a lead investor that comes in and then you have to raise the rest of the balance.
So said another way, investors are getting together and making sure if we are going to invest in this company, let's circle the wagons and work together.
Absolutely.
Many hands makes for light work. We can make sure we get this outcome.
And you see more sophisticated investors doing that, while the unsophisticated ones, you have a lot of family offices or market-adjacent VCs coming in. They're on the sidelines. They want to say, wait for better times. Whereas we have a better view of when the next 2, 3, 4 years are going to look like. So it's easier for us to create conviction in our investments.
Okay, Jeff, I didn't leave you last. I left you last for a reason. Indonesia is a very large market. 280 million?
Yes.
Which is essentially, we have 330 million US. It's the same size market, but it's a very different market. You have a very young market.
Yep.
Maybe the average revenue per customer might be a little bit lower, but they're incredibly young and very tech savvy. Things tend to spread very fast in Indonesia. Maybe you could explain at Alpha JWC, your firm, what you've seen in terms of the velocity of products taking off. You could give us some examples of how Indonesia is different than, say, the US or the Middle East region.
Yeah, thanks, J-Cal. So let me bring you to Indonesia. And I think why I'm here as one of the only Indonesian speakers, some people say that Indonesia is the world's biggest kept secret. The reason why is because we are 4th largest population in the world. We are now the 16th economy in the world, but we aim to be the 4th in the next 20 years. And that is...
You want to go from 16 to 4?
Yes.
How?
So let's play our strengths. Do you know that Indonesia is the largest nickel producers in the world?
Didn't know it.
If we think that electric vehicle is going to be the trend, right? Indonesia will be relevant. So the government just changed the regulation from exporting raw material nickel to we need to process it first. That's the first step. So downstreaming is big there. Number 2, we are also big on food. We are number 4 in coffee and shrimp. We are doing a lot of technology-enabled kind of tools to improve the yield of the farmers. So we invest a lot in agriculture. Agriculture, consumer is a big theme. But the most important thing, and I'll give you a couple of interesting facts. We are maybe one of the largest country by population in the world that works with everyone, I will say. This is arguable. We work with the US, we work with China, we work with India, we work with everyone. So, and we will have election next year, and it's going to be a good election. So everyone in Indonesia only have one target and one goal, is the Golden Indonesia 2045, is to become the 4th largest economy in the world.
Does the government invest in funds like yours, and are they investing in startups? How are they making the region, your region in Indonesia, more fluid for founders? Are there specific things that actually work, or is it just public relations, PR, marketing?
So there's a lot of good tailwind in regulations in Indonesia.
Okay.
The first thing is related to investments. Indonesia government just formed Indonesian Sovereign Wealth Fund 2-3 years ago. Okay. And started to co-invest with a lot of sovereign wealth fund across the globe as well. So that's number 1.
there's a lot of regulation that is more business friendly, that actually encourage more investments, more talents coming back to the country. A lot of great regulations, and for examples, the founder of one of the unicorns in Indonesia is now the education minister, right? So there's a lot of not only regulation changes, but also a lot of young people, young talented people going to the government, and this is only going to support the future growth of the country.
Henry, this is kind of the opposite of what we experience in the US. The government is actively working against the companies and not supporting them, and more regulation. Do you think it actually matters, or do entrepreneurs just plow through no matter what?
I think the tension definitely creating challenges, but also it's creating opportunities. I'll give you one example. I think, for example, in the semiconductor industries, for example, specifically in the GPU space, the world is basically dominated by two players in the market. NVIDIA has about 70–80% of the market. AMD, which is the other player, incumbent player, has about 20–30% of the market share. And that's the case in China. And there wasn't any chance for any new startups whatsoever in China in the space, given the dominant positions. But because US banned a lot of the exports of high-end chips, high computing power chips into China, China is now looking for self-sufficiency in the domestic semiconductor supply chain. So that's why we're using our R&D fund to basically deploy in our market to create companies that can substitute whatever NVIDIA and AMD is leaving. And they're leaving a very big market. Right? NVIDIA alone is selling 20–30 billion worth of chips into that market. It's about 1/4 of the global markets. So the moment every time US government issue a sanction or restriction in exports, the share price tanked.
Yeah.
There's opportunity for China.
Yeah.
So there are opportunities, certainly, besides challenges.
Thomas, you have things like the X Games. They've obviously gone international. We're seeing certain societies become more closed, like China, and then certain ones, the kingdom, very much open for business and trying to build bridges. When you look at the global market, how is that impacting companies when they think, what is the second market, the third market, the fourth market I should go to? What are entrepreneurs thinking right now? Give me the specific ranking overall. I know it's hard to do, but I like specifics. Give me your second, third, fourth when you're advising them, go here, go here, go here.
100%, yes.
Yeah.
And it's interesting because the people we invest in are dreamers, right? They're people with a big vision, and they don't even know if they can accomplish it or not. And the founders that we invest in, they're great, smart minds that are just a little bit crazy as well, just the right crazy to turn an amazing idea into something big. And you need to have an infrastructure where you can thrive like this. So while economies that are closing are certainly not a market we're advising in. Now what we see is that the US, North America, still generates the most amount of innovation in the world. That is still true, whether that is through founders born and raised in the US or people seeking out to move to the United States to set up shop there. We're seeing incredible amount of innovation now also happening in parts of South America, where entrepreneurs are discovering a lot of capital, especially in sports, but somewhat in health as well. Fintech was the first foray into that we saw as well. And then 100% for us from a sports perspective, you've heard about all these amazing investments that the PIF has done, but that are going to follow in the years to come, especially in those giga projects. This is 100% the market that we want to invest in and will invest in. And I believe a market where we're going to find some dreamers as well that will go the other way, come from here to the United States.
Jacques-Philippe, where are you seeing founders looking when they start to think global? Because, listen, the US is a great market to start, great capital, but eventually, we saw it with Uber, we saw it with Robinhood. They start thinking, what are my second, third, fourth markets? What are you seeing?
Sure. I think the developing markets are starting to get a lot more traction. And, if you asked this question 5–10 years ago, then it would have been China as kind of where they're going, China, India. But nowadays, given the macroeconomic environments and geopolitics, you're starting to see Africa, you're starting to see Indonesia, you're seeing some Latin America.
China's off the board.
China's not happening. And I think that's a good thing, right? You're starting to see greater dispersion in the Middle East. So I've been coming here since 2017. And I have to admit, when I came the first time, it was more curiosity, like what's happening. But having seen the evolution over the last 6 years, I think you're going to see a lot more people coming. I've been here since Sunday, and I know a number of people from the US who have actually moved here.
Do you have LPs from the region?
I have an LP. I'd love more LPs.
You have one LP from
I
the
have
region.
one. You have to start somewhere. So
yeah, it's a good start.
It's a great space for that. And then in terms of strategic, so from a geographic perspective, I think developing markets, so you're going to start seeing more reverse brain drain because the U.S. is the land of immigrants. So you're starting to see many of them going back to wherever they have greater
we see
connectivity.
that with India specifically.
Absolutely.
Yeah.
And then from a tech perspective, I think AI and seeing where it connects to whatever sectors they're interested in. And as far as they're looking at sectors that can really complement society in consequential ways, then Goodlike is a great port of call, and we're looking for that.
Raid, how do you look at how unique the ideas are in the region? Most times when a region emerges, we see they'll study another region and maybe localize the idea. Some might say copy it, but it's generally localize it and make it unique maybe for those people and introduce it. Buy now, pay later comes to mind, right? Or ride sharing. Have you started to see the founders who have success doing that start to come up with very unique ideas that haven't been done globally, or has that not started to happen as a trend in the Middle East region yet?
I think first, on the first point of copying, I don't think it's a bad thing to copy, right?
No, it's great.
I think it's good to start where people ended, and we can innovate on that.
Yes.
And that's how we get better outcomes, and we're seeing that a lot in the different entrepreneurs and products we have here. When it comes to new ideas and innovation, I think every region has it. There is no monopoly on new ideas. So there are many examples in Saudi Arabia, in UAE, in Egypt, in Jordan that are coming up with new technologies and new ideas, because it's about also technology is the best when it solves a problem.
Right.
And every region or the globe has common problems, but every country, every city has its own problems to be solved, and people adapt to those accordingly.
Yeah. The most unique one I met today, Bread Fast. Have you seen this company? They're selling $100 million in bread a year. They deliver bread every morning. So it's Uber for bread. It's a genius idea. And so let's talk about failure. In order to be successful, you have to take risks. You got to fail a lot. So are the entrepreneurs in the region allowed, and do you feel they have the permission from the investors to fail, and to fail spectacularly, and then be funded again after they learn something? Or is that not the culture yet? Is there shame in failure?
So I'm a failed entrepreneur.
I'm a failure too.
From a previous life. So,
so
I think failure is where you learn, right?
Yeah.
And if you look at, now I'm talking in general, right? When you look at technology VCs, statistically the odds are against you, right? So you can't hit them all, right? It's your model is based that you'll win
the power law.
Exactly, and you'll be losing in a lot, right?
Yeah.
I think failure is learnings, and I don't see it as you want to create a serial entrepreneurs at the end of the day.
So it's culturally okay?
Maybe if you asked this 10 years ago, I think the answer would be no. Now we're seeing it that there are many technologies and new codes coming out there, and some failed and some succeeded. And the ones that failed, the entrepreneur went to another one and succeeded. And the ones that succeeded, the entrepreneur went to others and failed.
This is the greatest success we have in America. When somebody fails, what we say to them is, what's your next idea? Immediately. Because we know that you tried and you learned something, so we always want to know the next idea.
I'll add to that and how we recruit. Sometimes you look at people who have a great CV, been in very normal companies.
Yes, very safe.
And you say, okay, and then you see somebody who's been in different companies that had problems. I'll choose that person over that person.
Yes.
And any
more grit, yeah. In Indonesia, you didn't answer my first question, which was, tell us about how fast technology can take off there, and maybe some examples, and how technology spreads in Indonesia.
Yeah, so maybe I also touch a bit on your last question, because...
about failure.
About failure. And
you
also
failed a lot.
We have fair share of failure. And
no, I'm talking about you specifically. You told me before that you're always failing.
Jason,
you learned a lot.
You already told me that, okay, let's be vulnerable. Yeah, I mean, I have my fair share of failure. There's nothing to be ashamed of, right?
No.
It's a marathon, it's not a sprint. So 9 years ago, I actually attended the conference, your conference in San Francisco.
You came to my conference?
Yes, and then that's actually inspired me to be a VC.
What?
Yes.
My conference.
Testimonial right there.
Testimonial. And in the the last 1 year is actually, I learned a lot compared to the first 8 years of my career. And one of my biggest learning I want to share here is that what works in the US might not work in the Indonesia. What you said about, okay, whenever someone is failing and then let's do it, yeah, that might work in the US. In Indonesia, it's very different. And
shame?
No, it's not shame. Why the entrepreneurs fail in Indonesia will be different because your ecosystem. You know why I wanted to be a VC after your conference, because you're angel investors. Your conference is just amazing. Okay, this is an angel investor conference and you have so many great CEOs. The ecosystem was there. In Indonesia, not that existent. So that's the reason why I think that I want to be an entrepreneur, but I think I can be more useful to a lot of entrepreneurs by being a VC.
What's the number one thing?
Is different.
What's the number one thing you've learned from failure for yourself personally as a capital allocator? What's the
market is bigger than the founder. In the US, maybe, like I heard this a lot. Founder is more important. The great product is the best marketing. This was from your conference, right?
Yeah.
Not as simple as that.
Market is being the founder. Thomas, what have you learned from the long list of failures that you've accumulated?
Clearly, I've learned a lot from that. But
the last year were hard, so think it for a second. I'm going to ask each of you about failure. What have you learned most?
Yeah, 100%. And the answer is, you have to take into account what you learned, right? You have to be able to accept criticism. And if you do that and you are a good communicator while telling you, look, we're struggling, it's not working out, then you get a second chance. If you're somebody that holds back information and tells you before it's too late, I think there's very little chance that you get a second chance on that.
Got it. That's for the entrepreneurs.
Yeah.
So when things go bad, the best advice for entrepreneurs is to talk more.
Exactly.
When you're failing, you want to talk less. But if you talk to your investors, we can help.
We want to help.
Yes. And if it's going to fail, at least we know.
That's right.
And we can help you shut down with grace.
Exactly.
But what have you learned from your failures?
From my failures?
Personal. Be vulnerable. Thomas, I know it's hard.
Yeah, no, listen, I try to not be vulnerable with my team here, but no, I'm just kidding.
They're going to love you when you do it. Don't cry.
No, I have learned that I have to be honest with myself, right? That's the most important thing. It's like you believe when you're doing well, everything is going right, and you should follow the way. If you don't allow yourself to adapt in the way of your thinking and are open-minded, I think that's the most important way to move on from failure, right? An adaptive mind, look forward and stay positive.
Staying positive, very important. What have you learned from all the failure of the last 2 years?
I couldn't think of any failure. I'm kidding. But I think, just, have a healthy balance sheet is important. Given the changing of capital markets, always raise more capital while the company can, because sometimes founders are concerned about dilution.
And you didn't do this.
Some of my portfolio company didn't fundraise enough to get through the rainy day.
And you were responsible for mentoring them.
We've been telling them along the way, but sometimes we didn't push hard enough. Have been thinking back.
Got it. Yeah, and this is what's important about mentoring, right?
Correct.
Even if they don't want to listen, sometimes you have to sit them down again and say, you have to make the cuts, you have to raise more money.
Correct.
JP, if I may call you JP.
Only for you, Jason, and I appreciate it.
You can call me JCal.
JC. JK.
Yeah, JC. Jesus Christ, Julius
there
Caesar.
We go. So two things on failure. One, I've had hopefully more than my fair share, and I don't wish that on anyone. And I think failing forward is key. So that's how I think about it. I think of every failure as a huge opportunity to grow and learn.
Yes.
And I've been a lifelong martial artist. You don't get better by not losing or by not getting hit. Every time you get hit, that's a lesson.
Yes.
And I think that's a metaphor for life. And the second thing I wanted to share is I saw Adam Newman and my good friend Jen Zhu coming on, and I think they're a great continuation of failing forward. So if you want,
Adam Newman is the greatest example of failing forward.
If you want to stay on this topic, then stay in this room, and you probably get a lot more on the idea of failing forward.
Right?
I cannot.
You can't think of a failure?
No, I confessed
what have you
in the
learned?
beginning. But I'll build on all the discussions we had. One, you mentioned runway. Have your eye on runway.
Yes.
Make sure you have a strong CFO or finance guy. I think that's a critical.
Controls and governance, so important.
Have visibility. I think another part is, learning from the failures. It's not, you fall and get up. You move forward. And a third one I would say is, listen. Because sometimes when you're vested, you don't listen. Yeah, there's a confirmation bias, right?
Confirmation bias.
And you really need to have a good ecosystem, coaches around you that wake up, this is not working. But if you have that and you have the right visibility on your funding, and I think you can synchronize between that.
Okay, they were incredibly honest. I think they deserve a big round of applause. Let's give it up. Okay, and stick around. There's some amazing content in just 2 minutes.